A splendid evening it is to viewers. Welcome to Equity News and Equity Access, your aerial perspective of stock market developments and of developments in the Zimbabwean economy. Thank you for joining us as we broadcast live from Hampton Studios. I'm Ibn Mabunda. Let's get started. The International Monetary Fund resident representative in Zimbabwe has warned government against boosting wages for state workers. The representative highlighted how the government wage bill is now on unsustainable footing, as well as highlighting the importance of alignment of the public wage growth against the growth of the particular economy. In the most recent mid-term budget, the Minister of Finance increased government's wage bill from 4 billion to just over 5 billion Zimbabwean dollars. This comes as the country is grappling with triple-digit inflation, which came in at 175% in the month of June. Meanwhile, Zimstats has since been instructed to suspend the publication of headline inflation. In other stories, RBZ is issuing 365-day treasury bills amounting to 60 million Zimbabwean dollars to finance government programs. The offer opens today and closes on Thursday, August 22 at 12 p.m. Zera announces new fuel prices effective today. The new price of diesel has been marginally increased by 9 cents from $9.27 to $9.36. The price of petrol has been adjusted to $9.12 from last week's price of $9.09. According to Zera, the changes in the fuel prices are due to the FOB price movements and the revised duty regime in SI 161 of 2019. This, of course, comes in face of fuel shortages that the country is currently facing and the inflation that is playing out in the economy. Finance Minister Mthuli Ncube says Zimbabwe is looking forward to borrowing 1.9 billion United States dollars from the G7 in order to clear debts to the African Development Bank as well as the World Bank. The group, the G7 is set to convene soon, and government is looking to make a headway where that is concerned. Beyond our borders, Rwanda's tourism industry takes on a boom, scaling 114% over the past few months right up to this point. This comes in the wake of Rwanda's aggressive marketing policy that has actually seen international tourists frequenting the East African nation. Now, this concludes our evening news bulletin. Up next is a look at the stock markets in Markets Daily. Please stay tuned.
Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe with a complete range of activities including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication and experience, making us your ideal partner for success. Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe with a complete range of activities including banking, short and long-term insurance, asset management and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication and experience, making us your ideal partner for success.
Good evening, ladies and gentlemen. Welcome to Markets Daily on Equity Access. My name is Anis Chumbu, and let's get on to it. Now, the stock market has given in with the week opening coming off 0.55% for both the all-share and the industrial index, for these two indices to settle at 178.72 points, while industrials index is at 595.87 points. Mining's index was stable again today. The top 10 index is down 0.85% for it to settle 164.26 points. Now, seesawing action has continued on this on the stock exchange on a week-on-week basis. With the prior week slightly recovering, but then still was a little bit lower than the prior week. So, which has registers about the third week running now in losses. with a lot of counters having gone up and down throughout the week, we haven't had very much a stable direction as of yet coming from investors, but there have been some counters that have been predominantly going up, one of which would be Old Mutual, but Old Mutual today did give in today, coming off 7.71% after having gone on a 19-session run of it gaining on a daily basis. Now today, Old Mutual settled at around about 2004.77 cents, while the dually listed counter did also come off a little bit on the JSE today. For some of our top 10 laggards today, which were about 5 of them today, inclusive of Old Mutual, would be Padenga, which did lead up 0.14%. Padenga did recently mention that they are very much interested in investing in an export-oriented business, and they have given us a notice as to the next EGM that is to be held for them to actually vote in on the issue. Their business would be very much almost within the same regards of agriculture. Inscore is down 0.43%, selling at 203.94 cents today, while cassava did lead up 0.22% for it to sell at 129.71 cents. Very interesting note would be that since cassava did list, they have not yet had a day off in terms of volumes traded on a day-on-day basis. Very interesting that the counter is quite volatile as well in terms of its price valuations going in either direction almost on a daily basis. Now the counter is almost is one of 3 counters on the top 10 index that is in the negative on a year-to-date basis, settling at about 9.36% below its year opening price, while Econet is also within that range, down 9.27% on that scale of a year-to-date basis. Now 129.52 cents is the share value at the current moment. Now and also inclusive of that would be Sidco, which is down about 29%. Now Sidco was among the top, was among 4 risers of today's trading session, which did add about 0.17% for it to sell 150.25 cents, while Sidco International Limited did come off 0.1, also added 1.12% to its share value to about 215.25 points. Now, Sidco did have an AGM recently, and in their trading update, they did mention that they are now about to begin their selling season, and they're expecting numbers to be a little bit depressed. I mean, there seems to be not much motivation coming from individual farmers if the Command Agriculture or some sort of program that is within that line coming from the government would be their only hope for their volumes to still to make some comparative sense as to how they performed in the prior year. But as of the current state, with current economic conditions and a very low disposable income by a lot of farmers within Zimbabwe right now, it would mean that their volumes would be depressed, and we should be expecting a knock within their revenues. Even though they did mention that they do have an argument that they are expecting for their revenues not to come off too much, or rather supersede their prior year's revenues, mainly because farming is the backbone of the economy, and it is by no means any option for most farmers to let go of that because of the future value that they would get out of it. Even though we have, especially regarding that, we have some very scary statistics that have been given by some well-renowned organizations in terms of poverty going forward in Zimbabwe. Now we are, as we just round off, Old Mutual did lead a set of about 7 laggards on the stock exchange. Trailing that was OK, Axia, and Insco. That did come off 1.21%, 1.04%, and 0.43% for all of these for all three counters to settle at 38.83 cents, 48 cents, and 204.83 cents. Econet did cap the top five laggard set coming is to settle at 130 cents in the trading session today. Now we are still flighting our initial advert about the economic review and outlook paper that we did publish for our Q2. Inflation is pegged at around about 316.5% by year end, even though Mthuli has taken away the privilege of us getting national statistics from Zimstat in terms of them being hard to compare, especially coming out of a US dollar era. But some economists do argue that we could always factor in the changes, and that comparison could still be very much made. I don't know how much more we would want to give, what much more would want to get from Tuli and his cronies, but we are expecting that inflation number to balloon around about that projection. GDP, we're expecting it around about -4%. They're about where we have continued and stayed with our narrative since Q1 that we are in stagflation. But for you to get a lot more insights in terms of why we have such kind of projections and an understanding as to how we are thinking in terms of where the economy is going, how it's going to perform even going into 2020, we would very much be delighted to sell this paper to you with an invoice. Do just contact Aaron, AARONC at equityaccess.net for you to get more details and the paper delivered to your preferred address. Now, from the Equity Access team and I, do not forget to like, follow and subscribe our YouTube, Twitter and Facebook accounts at Equity Access. And do visit our website www.equityaccess.net. Good evening.